Shares of NVIDIA are trading lower after reporting a beat for the third quarter. But joining us now is Aswath Damodaran. He is a professor of finance, and he's known as the Dean of Valuation at the NYU Stern School of Business. He is also an NVIDIA shareholder. Professor, it's great to have you on. Do you want to get your initial reaction to these results and what it means for the valuation of NVIDIA, even as revenue has almost doubled since a year ago?
That's a scary thought, right? I mean, you deliver a 94% growth in revenue, 75% gross margins, 62% operating margin. That's an amazing company. And you lose 4% of your market value. It tells you how much the expectations game on NVIDIA has been ramped up. They don't just have to beat analyst estimates. They got to beat them by 10%. And I think investors are also increasingly focused on the guidance that NVIDIA is offering. And the negative reaction, I think, is coming from the sobering of that guidance, which is, I think NVIDIA is trying to bring investors down for a soft landing, bringing expectations down. But it's going to be painful. Every earnings report, you're going to see more of this phenomenon play out, of them beating the numbers, but still seeing the stock price go down.
How much of this phenomenon around NVIDIA stock is company-specific with investors versus a reflection of more risk-on appetite in the market, more liquidity coming into the market, and investors just being more excited about big growth stories in general?
It's not an or, it's both. The fact that investors are feeling good about stocks, that equity risk premiums are down, that they feel that they can buy stocks at a higher price is helping. But I think a great deal of this is company-specific. I mean, you had $2.2 trillion in market cap over the course of a year. I mean, that's mind-blowing in terms of the additional market cap created. I do think, though, that there's a disconnect emerging here between what companies are spending on the architecture of AI, and I think your previous guest mentioned it, and the revenues you're actually generating from AI products and services. And that's going to increasingly come into focus in future quarters.
Aswath, here's my pushback on this, because, you know, it's my job. Somebody's got to. This reminds me, in a way, of the argument against buying Apple in 2018. Oh, well, there's Samsung out there. Well, how many more people can you sell a phone this expensive? Margins have to eventually come down. But it's up something like 4x, above the high levels of that year. At what point can you, and I mean you specifically, buy a stock like NVIDIA after it's been on the run that it's been on, under the idea that it's just so unique it can go much higher still?
No, I think that it is unique. It is in a market where it controls the market. The problem is the market itself might be hitting a stress point, because if you don't get ultimately, NVIDIA's revenues are cost to some other company. So those costs have to be covered with products and services that those companies sell. And right now, at least from what I'm hearing from those companies, delivering on AI products and services is turning out to be more difficult than they thought. And that's going to eventually have to show up in them buying fewer chips.
So my question, though, was what would it take? What kinds of evidence in the market would it take for you to believe, despite all of that and the idea that there are cheaper AI plays out there, this one is so special, even though it looks expensive based on what's expected in the next couple quarters, that it's still worth buying, even though you bought so much of it when it was a lot cheaper?
I think at this price, if you're buying, you're expecting the AI chip product and service market to be much bigger than people are anticipating it to be. And you got to be clear that that's what you're buying based on. I mean, even if you give NVIDIA dominance of the AI chip market, which I think they have right now, and maintaining these sky-high margins, you can't get to 144 without something additional happening. So it's almost like you're buying into another market out there that NVIDIA can find and dominate. And that's a tough call.
Do you think this speaks to the conversation we're having right now, all the hype we've seen going into AI? Is this helping to propel this broader rotation that we're seeing into other parts of the market, like cyclicals, like small caps? Keep talking about it as a Trump trade, but is it also just the fact that the AI trade needs to take a breather?
No, I think it does have to take a pause, because I think we've overreached on the AI trade, because I think we still need to see whether it can be monetized. I see AI on almost everything I buy now. I'm not paying for any of the stuff that I'm getting as free AI. The test will be when my email starts charging me $3 extra per month to use an AI feature. Am I willing to pay those extra $3? That's going to be the test for the AI product and service market, is whether people are willing to pay. And for that to happen, AI's got to do something you can't do right now that is unique and special.